Hey guys, Brown Asset Management here, and today I'm looking at Verizon Communications, ticker symbol VZ, using my 7 simple steps. Let's have a look at the stock price over the last year. At the start of 2020, Verizon was actually $61 a share, hit a 52-week low during the pandemic at $48 a share, and has been on a pretty up and down trajectory since then. It did hit a 52-week high at $62 a share, but is trading at a bit of a discount right now at $55 a share. Now if we look at against the market, which is in the green line, you can see the market has quite handily beat Verizon over the last year. So the market cap of Verizon is 230 billion. So now let's look at my 7 steps. So let's have a look at step 1 is the PE ratio less than the market, and Verizon currently has a very low price to earnings ratio of 12.94, which beats the market at 21. So that's a pass there. Now we're going to look at step 2 is the price to earnings ratio less than the sector, and the sector is the communications sector with 22.15, so that is another check mark, so 2 check marks off the bat. Now on to step 3, has the revenue increased, and the revenue has gone from 126 billion to just over 128 billion, so that's a check mark there, revenue has increased. Step 4 is the profit increasing, and the profit has gone from 30 million to just under 18 billion, so that is a fail. This profit does look like a bit of an outlier, so it'll be interesting to check this one, but a fail nonetheless. So step 5 are the shares outstanding decreasing, and the shares have gone from 4.08 billion to 4.13 billion. So that is a fail. They have increased slightly, but still a fail nonetheless. Just as we head on to my next step, I just want to say thank you all for watching. Give a like down below if you've enjoyed the video, and give a comment your thoughts on Verizon. Let's have a look at step number 6. Are the current assets greater than the current liabilities? So the current assets of Verizon are 54.5 billion, whereas the current liabilities are just under 40. So that's a check mark there. They can pay off all their current debt with their current assets, which is great news. Now on to the final step is the free cash flow increasing, and the free cash flow has gone from 7.4 billion to over 21 billion. So that's a massive check mark there. Verizon has a lot of free cash flow, and it's increased dramatically over these last few years. So if we get an average of these years, that gives us 15, so I'll be looking at the more recent number. The free cash flow yield of Verizon is the free cash flow divided by the enterprise value, and the enterprise value is currently 213 billion, so that gives a free cash flow yield of 10% and a free cash flow ratio of 9.95. Those are great numbers, one of the best I've seen so far. Verizon does pay a dividend, and it pays a very good dividend with 4.4%. The ex-dividend date is the 8th of April 21, so buy your shares before then if you want to get paid on May. They have been declared at 62 cents a share, so if you bought 85 shares of Verizon, which is a lot of money in fairness, you would actually get a share of Verizon free in the next payment. So looking over at the analyst ratings, the majority of the analysts do have it a hold, with some leaning towards a buy and a strong buy, and the recommended rating is on the bullish side, but just slightly over a hold actually with 2.7. But interestingly enough, the price targets of Verizon on the high and average side range from $70 to $60. So if it's currently at just over 55, then the analysts are saying it's quite a buy. And heading over to Simply Wall Street, they're a lot more bullish on Verizon. They think it has a fair value of $113, which means it's at a 50% undervalued at the moment. So Simply Wall Street are saying buy the stock. So to quickly summarize the 7 steps, we have 5 passes and 2 fails. The P ratio was less than the market. The P ratio was less than the sector. Revenue has increased. Profit has not increased. Neither have the shares outstanding. They have increased. Current assets can pay off the current liabilities, and the free cash flow is increasing, and they have a very good yield and ratio. So let's have a look at my model and see what the model says. So I have 2 models here. One is a discounted free cash flow, and the other is the Buffett-Graham intrinsic value, and my discounted free cash flow has it massively undervalued at the minute. It has a calculated stock price of $100 a share, meaning it's 81% discounted. These free cash flows, I've actually gone a bit bearish here on the free cash flows. You can see they're pretty flat. Even with the current price of Verizon, even with this sort of stunted growth, it's still massively undervalued in terms of a free cash flow analysis. And if we look at the Buffett-Graham intrinsic value, that has a fair value of $68 a share, which is a good discount, but a Graham price of 51. The Graham price is a very reserved number, so this fair value is something you can look at. So according to the model, it looks like Verizon is a buy. I do like Verizon, and with that healthy dividend and the amount of free cash flow it has, I don't think it's going anywhere. I think it's actually in a better shape than AT&T at the minute, and I'm very bullish on AT&T. So I'm just going to look at some of the moving averages, some of the technicals here. I have the stock price in blue, a 50-day in purple, and a 200-day in gold. So if we look more recent here, you can see there was a death cross, which is a sell signal here as the shorter moving day average crossed the longer day moving average, and the 50-day moving average has crossed the price. So these would be very bearish signals, but you can see it's following the trend that Verizon's gone down. But it's currently at $55 a share. Verizon hasn't been $55 a share consistently since 2018. So I think it's a great buying opportunity for Verizon now. You can see we had this V dip here and it did rebound quite strongly. So even if this does sink a little bit, I think Verizon does have room for a rebound. I think I will be purchasing Verizon. I think it's a great stock and I hope you guys are interested in what I've shown you today. Right guys, thanks all for watching. Please leave a like if you enjoyed the video, give a comment on Verizon down below, give a comment on what stock you want me to review next, and consider subscribing if you enjoy stock analysis videos, and I'll catch you guys next time.